Hey everyone, Les here from BG Trading. Hope you're well. Hope you had a nice weekend. Today is Monday, 22nd of August, 2022. And I'll be talking about how we hedge our portfolio against a market correction or potential market crash. So let's have a look. Just want to remind, this is a general information only. It's not a financial advice. And just as from BG Trading, sharing with you how we apply our strategies, BGS20 and BG Trading, to know when to buy and when to sell stocks, how we set up targets, how we avoid FOMO, how we hedge against market corrections, and much more in this channel. So if you like, please subscribe to the channel and share this video with someone that you believe it could be helping. And also like to take the opportunity to invite you to become a part of our community in the Facebook, free community, which calls Buy, Grow, Sell Strategy for Share Traders. We're going to be sharing the link for this analysis in this community. So let's start with the first indicator that we use to see whether we could see a market correction or not, which is the volatility index. Volatility index, it is an index that sort of measures the, if you go to Investopedia here, so you can have a little bit idea of what really a volatility index is made of. As you can see, it is a real-time index that represents the market's expectation for a relative strength of a near-term price change on S&P 500. So because it's derivated from the prices of SPX index options with near-term expiration dates, it generates 30 days forward projection of volatility, which is really what we wanted to look into the short term if we were traders, right? One of the decision-making facts that we use is volatility index. And then essentially, what it says is that investors use VIX, volatility index, to measure levels of risk, fear, and stress in the market when making investor decisions. In this case, if you look at the chart here, we can see that we are now having an increase of this sentiment. If you look in the market here, we can see that we are having green candles. Is almost like a reversing now. And if you compare to past history, results here, you can see that it repeats itself, and you get to have these spikes, and as soon as it starts suggesting higher volumes on the upside, just like any stock, it shows that the market starts getting a little bit uneasy, and that's exactly when we start raising our red flags. So this is one of the indications that suggest on this game of probability that we might have a market correction. Now, the second one here is US 500. As you can see, we had about 20% rally in the last, pretty much last month and a half. And what I suggest is a strong rally comes with strong correction. As if history repeats, obviously, and that's what we look into when we look at probability here. We can see that every time the market has this strong upside, we come back with a strong pullback as well, or every time the market comes with strong pullback towards the downside, it comes with strong pullback to the upside. In this case, S&P 500 is still still in a bearish mode here for us, and what we either gonna see another one, I guess here we might gonna see a higher low here, which I would suggest we could see the candles come all the way here to this sort of level 4,000, or we even have a lower low if the market really turns bearish, which we don't know. But mostly important, we also look into individual stocks to see which stocks are actually getting back to a buying area, so we can buy those stocks together with our VIP members or not. So chart formation suggesting strong sort of a correction happening as we speak. And now going to ASX, the SP 200, we have exactly the same sort of chart formation. The SX actually didn't run 20% as SP 500, but ASX did run about 11%, which is a very strong rally for the Australian market. If you compare to past results, and this sort of rally, as you can see, always comes as well with strong pullbacks. And if that happens in this case, we might. I'm actually sort of guessing here because I can't tell what's going to happen because I don't know, and nobody really knows. But I would say a healthy pullback. Let's say the market's turning bullish again. A healthy pullback could bring the market all the way here to let's down 5% from the top, and this is still would be a considerably healthy pullback. So all the odds here now sort of looking to correction to continues, and we'll see further red candles on the downside. So the most optimistic case, I would say, the candles coming all the way here to the SMA 40, which is good. And the most pessimistic case would be the continuation of this pretty big downturn here, which honestly, I rather think that it's not going to happen. But again, like we don't guess anything. We trade with the market, and then trading with the market now put us in a position to start hedging the fund or getting into cash position, which exactly what we done last week. If you watch our last video till the end, we start sort of converting our positions into cash. Not all of them, because again, there's no guarantees in the market, and we could see this just keep going. But according to the game of probability, we're more inclined to have a good correction here. Now, coming back to my analysis, what we normally do. There's two ways that two approaches that we normally take to in these sort of situations. And the first approach is hedging the fund against the market crash and actually making profit out of that via two different instruments that we love, which is BBOs and BBUS. So I'm going to put details about each of those ETF funds. So basically, you can kind of technically short the market or replicate or gain with the fall. So, for example, here the ASX 200 is 1% down today. So if I'm on a BBOs, which we are, so we would be about 2% up, right? And as we use for stocks, we can probably be looking at a reversal, a bullish intersection level 2, if the candle surpasses the yellow line tomorrow. Then that would suggest that that's pretty much buying area for us. And more than trying to guess getting a target to sell, because we don't know whether this is going to come all the way to 20% to fulfill BGS 20 strategy. At least we are protected to against this sort of correction here. So in the BBUS, for example, BBUS, which is also another hedge fund that tends to that actually moves with the SP 500 against the SP 500 movement. So the BBUS is a fund that actually swings a lot longer than actually ASX. So say for instance now BBUS here, it could be it's on its way to 50% if it go really badly, and it still put the US market into sideways movement. So again, like if you are a US market trader, would be the one I would probably pick, BBUS. And if you're Australian trader, BBOs, but you can do any ones. We've been doing BBOs and BBUS sometimes, but this time we've done BBOs, and that's what we like doing. But again, like this is not a long-term investment at all for us. As you can see, it tends to go down with over the years because it's a hedge fund. It's not a investment. So as the market grows up in value over the long term, these funds they shrink in value as well. So great to use in short term, not so great for long term, if you see. Now, this is pretty much what I wanted to share with you guys in terms of hedging the portfolio and perhaps making some money out of the fall. And the good thing is, when you look into stocks that we've been buying before, like a BPH, for example, now going down, clearly going down. What we want to do is, if we're hedging, we're making money when it goes up, and then we can buy a lot more shares or same amount of shares before, and make and allocate the difference into our bank accounts and go and spend with family. So it's a great opportunity to actually not just protect the portfolio, but also make some few $1,000s, if depending how much you got. So that's what we do here. We recycle the money, buy the same stocks, and put some money aside, which we invest on our long-term strategy, which is property. We long-term investors of real estate. We believe that's the most effective long-term asset to have. So we do that. Okay, so this is my thoughts on the market at the moment. We're hedging. Markets are a little bit tricky at the moment. I'll definitely more inclined to take advantage of this correction than thinking the market's going to keep going up nuts in one straight line. If you agree or don't agree, please put in the comments below, and I will be delighted to answer and open a discussion with you. So I'll see you in the next video, and have a great week. Bye. We really hope this course will help you to make better decisions and make successful trades. See you in the course.